Welcome everyone to the Pro Trader and Plus and the FOMC Minutes. My name is Lee Goldstein, the Trading Director at 10 Minute Trades. Please remember, I'm not a financial advisor. All the trades we discuss are for educational purposes. Okay, good afternoon everyone. And the markets, I think, are waiting for these minutes. The amount of volatility is definitely, if you look at the markets 2 weeks ago and you compare them to today, there's quite a bit less volatility. But the big decision here for us is what the size of our orders should be away from the current price. How big should the tiers be? If we take a look at the DMM last month, we significantly increased our tiers to 60 and 80 from 16 to 25. Now, I don't think the markets are in that same level of volatility, but I did do a lot of last minute testing. On today, we had about 110 ticks of movement. Sorry, we had about 50 ticks of movement after the open. In April, it was over 350 ticks of movement. In February, it was pretty small. It was only about 30 or 40 ticks. And in January, the first hour had about 100 ticks of movement, a little bit more. I think the risk is extreme on the tiers that are on the DMM. I think they're way too small. But I don't think we should be 60 and 80 because then we won't get a fill. So here's what I would say to you. If you've received the DMM and you've looked at it, if you think these markets are completely normal, pre-tariff, then 16 and 25 would probably be okay. I think we're probably somewhere in the middle. We're going to get a fairly decent sized move, and I'm thinking of doubling our tiers. I'm not quadrupling them or tripling them like we did last month. But I think, so what's the rule? What's the thinking? The thinking is, and I do want to say hello to anyone that's watching us on YouTube. Let me turn on, the stream is on, I just need to turn a screen on here. The thinking is this when it comes to trap trades. The worst thing that could happen in a trap trade is it behaves like a breakout and it blows through your orders and it blows through your stop. That's the worst thing that can happen. Other than the fact that you could drop dead in the middle of the trade. That's the worst thing that can happen. Second worst thing is you can get stopped out. So we always say, I would rather not get filled than get stopped out. And that's true. I'd rather not get filled than get stopped out. Because you're always around for the next event if you don't keep getting stopped out. So that's obvious. I do believe if we use the small tiers, these markets are still pretty volatile. And I think we should protect ourselves by going, here's what I would do. I'd go 25 and 50 on our tiers. That's what I'm gonna do. 25 and 50. Now, here's the irony of ironies. The reason we didn't up the tiers for the DMM is because, number one, you don't know what the market's going to be like. When we did our testing, it was Sunday. We hadn't experienced the markets this week at all yet. And our spike sheet is very interesting. I don't have a problem with a 40 stop on the MES at all, TJ. No problem. Our spike sheet shows our current setup is safe for the past more than a year and a half. It goes all the way back to 2 Aprils ago. And this report hasn't moved that much. The biggest move was 32 ticks, other than April, which clearly was a huge move because of tariffs. So if you think we're going to get a totally normal move today, then you can use the current setup. But my setup, it really still will probably get us filled on the first tier because it's only going up 7 ticks. It really should be 30 and 50 if you want to be honest about it. But I'd rather have a slightly worse, what's the word I'm looking for? Average price per contract or average entry price. I'd rather have it a little bit worse and have a little more opportunity to get filled if I'm right. If I'm wrong, I could be wrong in two ways. I could be wrong in that, here's the thing, if I'm wrong, I think we'll still get filled. The main thing I can be wrong about is the level of volatility. I think that I've got a good setup. Now, I know you probably can't read or see the spike sheet, but in February it was a 15 tick move, January a 28 tick move, August 32, May 30. Those were the two biggest moves of the last couple of years, 30 and 32. And with our current small tiers, when you use a 25 on your second bracket, your second tier, and you add that to the stop, you have 45 ticks. That's 25 ticks of safety. If 30 ticks was your spike, and your zone of safety is the outer tier plus the stop, 25 plus 20, 45 minus 30 gives us plenty of room for safety if the markets were totally normal. I think they're not totally normal. I think there's still a lot of pent up volatility. That's what I think. So I would rather not get filled than get stopped. Now, what's fun about prop accounts, you can trade multiple ways in different accounts and see what happens. You could take one prop account, trade a trap trade with the current simple settings, 16 and 27, say, right? And you could also do my setup, 25 and 50, and see how that goes. That's in a separate prop account. That's the beauty of it. Now, will other instruments move? Yes. The MNQ, NQ will probably move. Gold could move. The RTY, of course, could move. Most instruments can move on this report. I'll set up a secondary MNQ reverse continue, all right, for one of my accounts. So I'll set that up first. MNQ reverse continue. And I'll do a target of 20 and a target of 40. Target one stop move. If it hits my first target, I'll go to break even and I'll use a stop of 75 ticks. And that's just a scalp. All right? That's a scalp. So that's a reverse continue on the MNQ. And I'll do that in one of my prop accounts. I have to connect them. Give me 1 second. So we'll do that. Targets are 20 and 40 with a stop of 75. Strictly just a possible scalp. And I'll do that in account number 10. And we'll label that MGC reversal. Let me make sure I have my right account. I want to use 12, not 10, 12. So tell the software the account you're going to use. Make sure that your chart trader is on that same account. And then I'll enable that and I get my buttons. I'm going to take a crazy risk because I believe I've got a good setup. In my Apex funded account, I'm going for the ES 25 and 50 on the tiers on the trap trade. Stop is 20. The activation time 13:59. $55. Tier 1, 25 ticks. I think that will get filled. Tier 2 is 50. So we have a zone of safety of 70 ticks. This is ES main trap trade. ES main trap trade. My other setup was MES. MES. And sorry, my other setup was MNQ on a scalp. MNQ on a scalp. I'll go over all of them. I'll go over it all. Main trade. Apex funded. Time 13:59:55. Stop is 20. Stop is 20. Tier 1 is 25. Tier 2 is 50. Same setup for the MES except the stop can be 40. And I'm going to label that ES trap. And I'm a grown-up. I accept it could do serious damage to my Apex funded account. I accept it. How large is my PA? When you say how large, it's a 50,000, Calvin. And I'm down about $500 in the account since I started with it. I'm definitely struggling a little bit in that account. All right, one more time. Main trade, Apex funded, time of activation on the trap trade, 13:59:55. 20 tick stop. Tier 1 is 25. Tier 2 is 50. Labeling it ES trap. Position 1 is a 1. Position 2 is a 1. And I'm down $117 today in that account. Never trade on an FOMC day. That's a good rule. Now, why do I feel good about my setups? Last night, I took 2 trades that we did not have trade rooms for. Australia's CPI, which the schedule had an error, and I'm not going to take the blame for that error. When I created the schedule, it was correct. And as the time went on, at the last minute, the calendar changed. It was too late to send out a DMM to correct, but the DMM would not have had the trade I took anyway. I took a trap trade on Australia's CPI, and I took a trap trade on New Zealand rate statement. Both of them because breakouts are not very good because of liquidity problems. And both my trap trades worked. So I'm feeling that I just have a decent sense of the amount of movement the market is giving us on some of these events. Now, that's no guarantee I'm going to be right, but I'm trusting my years of experience. Oil's tomorrow, right after gas. Yes, I made money. They were not huge moving trades, but they both were trap trades that offered profit possibility. Like $80 a trade to 120, somewhere in there. Only filled one tier. One order got filled. They were not very big moves. Even the New Zealand was surprisingly small. So we have our main trade is ES or MES trap. Main trade is ES or MES trap. So if you're trading MES trap, position 1 is a 1, position 2 is a 1. That's great to hear, TJ, very nice. Position 1 is a 1, position 2 is a 1. Tier 1 is 25, tier 2 is 50, all right? The stop is 20. I will not hesitate to move my stop manually on this report if I feel like I'm on the verge of getting stopped out and price action is not exploding in a continuous move, but it looks like it's going to tag me and then change direction. Because I think the stop can be a little bit bigger on both the MES and the ES on this event. All right. My second setup is an MNQ reverse continuation. Now, I labeled it incorrectly, and that's what confused everyone. MNQ, not MGC. I think we'll get better moves from the indexes than from gold. My setup, remember, reverse continuations, they're not etched in stone. They're opportunities. That's all. 20 tick target, 40 tick target. That second target's probably a little small. I think I'm going to make it 50 ticks. 75 tick stop, MNQ. And if it hits my first target of 20, I'll go to break even because it's a scalp. I like to go to break even on scalps. And then for anybody that feels the market really is the way it was before the tariffs, you can use the DMM exactly as it is, and I'll just watch that. I'm not going to trade that, but I have an extra chart open for the MES trap trade. I want to see if my thinking is good or not. It doesn't matter. I don't have an ego when it comes to trading. If I'm wrong, you do this as many years as I've done this, you're going to look like a fool in front of people a million times. And you're also going to look like a genius and a hero. And you just can't let it get to you because it's happened so many times. So I don't care. I only care if you all lose money. That's the only thing that I care about. And of course, I care if we lose as well. I'd be lying if I said I didn't. But members first and then us. So I'm going to label that the MES trap, and I'm going to use 16 and 25. And I think they're too small. I think that trade will get stopped out. Stop is 20. I'm only going to sim it, so I'm only going to watch it. I'm not even going to watch it. I'm just going to let it set up, and we'll analyze after we're done. I have two important trades. Hello, Chantal. Two important trades. But the one thing I want to do is I want to see my orders on the sim chart so I don't have to adjust them. So with a trap trade, you could set the time to 0 and set up your orders. See what I mean by set up my orders? Make sure I see them all. Okay? I want to make sure I see if the charts are too spread apart, then I don't see my stop. So that's what I mean by seeing my orders. Okay? And now I'm going to put the time back to normal. You could also press the F and put the chart back to default, and then you'll see your orders. Press the F in the upper right corner. That puts the chart adjustments back to default. All right. So I think there will be a pretty decent move on the minutes, but I don't expect it to be as big as a move on the statement because a lot of the information on the minutes is known. You know, it's what are minutes? They are a recap of what took place in a previous event. And then there also are extra comments. And it's the extra comments that everybody gets all worked up over, right? Let's look at, I have a video of January. I don't have April. And we made money in April. We expanded the tiers, and it was a very good trade. In January, let's see what happened. Remember, the markets were pretty normal in January, and this event has not been anything extraordinary. It's had plenty of no fills. It's not like the statement. It's not as volatile and it's not as profitable, but it's generally not as risky either. So in January, the news comes out. It doesn't fill for, it filled pretty fast, 9 seconds, reversed, chopped a bit. You could see it's chopping. It only filled one tier. So when you get one tier, don't forget you're going to have to use the cancel outer tier button at the top of your chart if you want to move your stop to safety. Moving the stop to safety means you move your stop break even plus profit. When only one tier fills, your order, your second tier, blocks the stop from being moved unless you cancel it. And that's what the cancel outer tier button does. Cancels that extra order so you can move your stop. And you could see in January, it went into profit, not by the biggest amount. And then it went and it filled that second tier. It was awfully slow. And then it had a decent reversal. And then it was very good. All right. So January had a pretty good size move. So who's trading what? Who's trading what? Who's here? Tell me what you're trading. Now, this is not has not been a great breakout trade over the course of history. Has not been a big breakout mover. All right, so let's see. MES on TJ, Roz on MES, Nitin ES Trap, MNQ Reverse, Francis MES, Ray ES Trap, MNQ. Okay. All right. We've only got 5 minutes to go. And I want to thank everyone who's watching us on YouTube. Hit that like button. You got to like this. All right, now I'm hearing some news in my headset. Today's been relatively quiet when we get down to, just looking at the news that I see on the chart, Financial Juice Pro. I don't see much, just not a lot of news today. Hello, MB, MES Trap. So I'm not surprised if we get a little bit of pre-release volatility, a little bit of movement. And don't forget, if at the last second you get uncomfortable, you can always cancel a trade and just leave on your after the news trade, your reverse continuation on the MNQ. How do you cancel a trade? Now, uh, if I wanted to cancel my MES trap trade, I just click the check mark. And when you remove the check mark, that cancels it. Now, of course, I recognize we could get a big explosion and that could just ruin the whole trap trade. It's possible. It could. But it's quite probable that we'll get a pop and a reverse. Look at what New Zealand did last night. This is not uncommon. New Zealand on the left. Now, I maybe I don't have the right recording because I don't think it's recorded properly. No, it didn't I don't think I recorded it properly. So I'm not going to be able to show us. We're too close to the trade. Let's keep an eye on the market. So there's not even a lot of news talking right now. Um, they're talking about inflation not picking up in Europe. Something about Chevron ending Venezuela contracts. Dick's Sporting Goods price target was cut a little bit. They had earnings this morning, I believe. Two minutes. Hard to believe another miserable rainy day. I think it's almost June and we haven't had maybe one day in the past 2 weeks you could ride a motorcycle without heavy jackets. It's ridiculous. Absolutely ridiculous. Yeah, Nvidia. I can't believe I made that a family money trade. But it has a tremendous opportunity. That's the only reason Nvidia could be a family money trade opportunity. Otherwise, it's obviously it's high risk. So we'll be back. What time are we gonna be back here? I forgot. 3:30? 3:40? All right. So we've got 50 seconds. Watching the regular setup all the way on the right on MES. I'm just going to watch it. I'm not going to touch that because that's a sim trade. The only trade I'm watching and trading seriously is my Apex PA funded ES trade. Totally accepting that if I'm wrong, it's going to hurt. Okay, there's the orders. Now, I think the news is probably out and known. They're out. So I'm wrong. No, I'm not wrong. It's not that I'm wrong. It's just that there's like no response. There's no response. Because remember, on the right, I'm watching the small setup. On the left, I've got a bigger setup. The small setup would fill much, much faster. Now, I normally will not wait more than a minute on a trap trade. I just won't. Because now we're not trading the news anymore. We're trading a delayed response. And I want to trade a burst and a drop and a pop. I don't want to trade a dribble in one direction that might just keep going in one direction. So I would cancel the main trade. The main trade is a cancel. The trap trade, to me, on the MES is also a cancel. It's just not a big enough move. The concern is now that it might just go in one direction. So this is a non-event, folks. There's just not much excitement, which is a surprise, but I really do think it's about NVIDIA today. I agree with Nitin. Now, we may get somewhat of a move up. I think even though the markets are down, my sense is the markets, they want to move up today, but I'm not going to take a trade now. I'm going to wait for NVIDIA, and we'll be back here. Let's check the time. We'll be back here at 3 for NVIDIA. And even our small setup did not fill. All right, so now it may fill right now because you're getting a push in one direction. It's not the way that I like to take a trap trade. So I'm canceled on everything. I'm canceled on everything. It's very difficult to know if there's a real trend being created. I think the real move is going to be NVIDIA. That's what the markets are looking for. This is important, but it's the statement that really was super important. Now, hang on, because I'm just listening in my headset to see if anything else really big is being said. So the MES, it's only moved up about 3 or 4 points at the most since we've been here. That's just not that much. What's interesting is the MNQ was a positive index before we got here, and the ES was negative. So the markets are a little bit mixed today, and I think NVIDIA will change that. Okay, everyone, thanks on YouTube for watching. Sometimes we get a no event. It's not the end of the world, and it's just the way it is.